Hey folks, Dan Bird with the Daily Scan. Midday report. It is 11:45 a.m. on the East Coast, and the Bears are back. It's August the 1st, first day of the month, first day of one of the two weakest months of the year, August and September, with September being the weakest. And it looks like we finally are breaking down. So, been talking about this for a while. Market has been extremely bullish, but we'll take a look here in a second. By the way, this one probably is going to go longer than normal today because I've got quite a few things to cover. So just want to prepare you for that. I'll try to get through it as quickly as possible. I am not a financial advisor, of course, so this is all for educational purposes only. I want to first take a look at what the market's doing today. Looking at on the website for subscribers, you can go to the charts page, and on the left-hand side, about halfway down is the 10-minute charts. So let's look first at the aggressive sectors. There's the big gap down today. I've been talking about this for a week. The market gaps up in the morning and then sells off most of the day. That is a sign of rotation from large traders against what retail people are trying to do. They think that they should be buying when the market goes up in the morning, and then professionals are selling off. So that's happened pretty much for the whole week. And then today or yesterday, I had a big gap up based on Microsoft and Meta, and then sold off all day long. So it couldn't hold it. End of the day right there, you see. And yesterday when I did the midday, it was about noon, so we're right here. So I said that it had sold off. It was trying to make a comeback and then didn't. Went down, went back up, try to make another one, and then finally this morning, big gap down, and now we're basically moving sideways. So it's going to be important to see what happens at the end of the day, if this can recover and move back up. But I think it looks like there's a lot of weakness right now. Technology ever since yesterday has been going down. Financials are down, discretionary is down. Communication services is the only one that's up, and it was up yesterday as well. That's where Meta is, and Google and Netflix. That's where they all reside. So that's the only one that's going up. Industrials is flat. Then if we look at the defensive, and yesterday I mentioned that these were down yesterday as well, or flat. So it looked like there wasn't any strength anywhere except for communication services. But today the strength is in defensive. So this is a clear sign that Wall Street is moving out of aggressive areas into defensive areas. Healthcare's up, staples is way up, energy down, utilities up, materials basically flat. Let's look at the rotation, growth versus value, actually pretty much flat. So I actually would have expected that to be down more. Of course, discretionary versus staples down quite a bit. This is a result of Amazon. So Amazon and Tesla make up about 45% of the discretionary sector. So you would expect with Amazon's report last night, that one would be down. Technology was down, pretty much flat. Semiconductors are making a comeback. So that's actually probably the only good thing about today so far. So we'll see if that can continue. And internet, interestingly, is down, even though the XLC communication services is actually up. But the internet portion of that, which is Google and Meta, is actually down. So that's interesting. We'll take a look at those. And then finally, growth versus value, large cap growth, basically sideways, mid cap down big time in the morning, both mid and small cap, down big in the morning and now making a comeback. So maybe there's hesitation, or it could be retail traders thinking that this is the time to jump in. I don't think that it is. I think it's time to stand aside and wait. So that's where things look right now. One of the questions somebody had was to take a look at UPS. So let's look at UPS and see what it's doing. That's the longer term view, the daily view of UPS. The comment was that it looks like it's time to buy. So what I want to say about that is, first off, if we look at this on a weekly chart, so I mentioned this last week, when in doubt, zoom out. So look at UPS on a weekly chart, and what do you see? Well, the first thing I see is that it's just continually going down ever since back, all the way back to 2022. It's been going down consistently. So let's put a trend line in here, and then I'll make a comment about whether it's a good buy point right now. So let's put a trend line here. So it was heading down right there pretty consistently. So that one was the downtrend until we got to the middle of 23. And then the downtrend accelerated. So in other words, it was even steeper until we got here to the beginning of 25. And now it has become even steeper still. Right here. It looks like a fan, doesn't it? So everything about this says stay away, to me anyway. So this is where I talk about what you need to decide what you are as a trader or as an investor, long-term, short-term, whatever it might be. You have to understand yourself, and it's all about psychology. So as a momentum trader, which is what I like to do, this is not for me. This is not a momentum chart. You can see it's below all the moving averages. They're all stacked. In fact, if I look at the stacked moving averages, you can see, I can even go back. Let's go back 5 years. So here's stacked moving averages. They were stacked to the positive all the way up here to 22, like I said before. And then in 22, they began to be stacked the opposite. And ever since right here in 23, as you see the 200-day is at the top. You want the 200-day to be at the bottom if you're a momentum trader. 200-day is at the top, and all the moving averages are stacked underneath. And it is actually accelerating to the downside. So for me, as a momentum trader, this is not something that I would want to get in. The other thing I see is this looks like a falling knife right here. Now, this is a weekly chart, so this is for this week. But that looks like a falling knife. Do you really want to catch a falling knife? On the daily, it looks like the downtrend is slowing down, certainly. And it may even have a spinning top right there, which could be a reversal. So you have to ask yourself, what kind of investor am I? If you are a value investor, yes, this is exactly the kind of place where you think you should be getting in. As a value investor, if you think that UPS is a good company, you think that they will continue over the long term. And as I showed you, this goes back 3 years, this downtrend. So long term for an uptrend could be another 3 years. It could easily go sideways right here and do nothing for 2 years, or it could start to go back up. And if you are a value investor or a value trader, let's say, that wants a short-term pop, then yes, it could actually pop back up, maybe up to the 50 up here. So you could get a $10 run if you want to get in there. For me, as a momentum investor, and all my scans are based on momentum, upside momentum primarily, this is not something that I would be getting into. So every person has to make their own decision and decide what they want to do. So thanks for the question. I really encourage people to ask me about certain stocks because it gives me an opportunity to talk about different ways to look at things, and each person has a different strategy, a different way of investing. So everyone's strategy is not universal, of course. If I go back here to the market bias matrix page, I want to show you something here as well that happened yesterday. So this is after the close. So for subscribers, I encourage you, if you do nothing else, just go to this page at the end of each day, or you can just log on to the home page and click on this market bias matrix over here. By the way, on the home page, you'll notice that yesterday it's got now 3 red squares. The only one that's green now is the long term. So that's giving you a clue. And then if you just click on that, it'll take you over here to this. And if you do nothing else but just look at this at the end of each day, And what you see yesterday is we're now beginning a downtrend. It's breaking below the trend line. Trend line is starting to curve over. This market bias chart has been incredibly accurate. It is made up of all these different segments of asset classes in the market: indexes, sectors, industry groups, intermarket relationships, commodities, metals, and currencies. All of these on a short-term, medium-term, and long-term basis. And when they change each day, you can see the squares around them. You can see how many changed to bearish just yesterday. There'll be more of those, I suspect, tonight. This usually goes from short-term, medium-term to long-term. Long-term is the last one, and that's why long-term is still green over here. And then the number up here is the overall. So that's all of these asset classes, short, medium, and long-term. 81% of them right now are bullish, but that was as high as 88% right here a couple of days ago. They made it all the way to 88%. It is impossible to get to 100% on this because some of these categories are counterintuitive, right? So the 20-year bonds and 10-year yields are usually opposite of each other. So the US dollar and gold a lot of times are opposite each other. By the way, gold just got a medium-term signal today as well. If you look at gold, you'll see it right here. Actually, it's coming back today. So gold popped back up, but it did get a medium-term down signal yesterday, probably because of the sell-off. The money's moving over to gold. The other one that I want to show you is transportation. This right here, this is the ETF for transportation. You can see this is, again, UPS is in that transportation industry group. So transportation has just been heading straight down. So this is another way that you can judge what the market's doing. But this has been extremely accurate, this market bias chart. Up here, you can see where it started to move up over here and accelerated right there on that day. That was basically April 24th. That was pretty much, it wasn't the exact bottom, but it was certainly where the bottom was confirmed. If we look at the S&P chart right up here, you'll see April 24th is right about here, right where it went above the 21 EMA. So that is usually my buy signal right there on that particular one, and that's exactly where the market bias chart indicated that we were confirming an uptrend. The market bias chart right now, I think, is confirming a downtrend. And one more day we get, and I think we will get even more today, and if not today, then the first part of next week. I think we're going to get even more. So that looks like it's confirming the downtrend right now. So let's take a look. So that's UPS. Another question that came in was long-term capital gains versus short-term capital gains. When do you take profits or do you hold for long-term capital gains? One of the comments was, if it's short-term capital gains, I'm paying 50%. If it's long-term capital gains, I'm paying, I think it's 15%. Let's actually look at that. But it's not 50%. So I want to clarify that. Long-term cap gain rate. 28%. 2025 year. These rates apply to most asset like stocks, bonds, however, collectibles, maybe tax at 28. Okay, so 15%. Married, you can see the categories here. Married filing jointly, 15% rate, 20% rate. It is, so that's what long-term capital gains rates would be. However, if you have short-term capital gains, it's based on your whatever income bracket you're in. And the misconception a lot of times says that if I'm in a 25% income bracket, then I'm paying 25%. That is not true. The income, at least in the US, is progressive. So you pay a certain rate. Let's see if it'll show me this. $25. Let's see if we can see what those are. All right, here we go. All right, we'll look at single right here. So 37% is the maximum. So if you're making over 626,000, then 37% is the tax bracket that you're in. But that is not the effective rate that you are paying. That is what you pay for anything over 626. From up to 10% of your income, you're paying 11.9. The next 2% of your income, or the next bracket right here, you're paying only 2% more, so 12%. So in other words, this is progressive. That doesn't mean you're paying 12% because you're in a 12% bracket. You have to figure out how much you pay in each bracket to figure out what your effective rate is. So if you're in a 37% bracket, your effective rate is likely somewhere around 24 or 30, somewhere around here, 24 to 32%. So let's call it roughly 25% is your effective rate, and that's at the maximum amount of 37%. So be sure to keep that in mind. So if you're paying short-term capital gains and you're making over 626,000, even though your bracket is 37, your effective rate is 25%. If you're paying long-term capital gains, then like I said, you're around 15 to 20%. So that's the difference. It's not a huge difference actually between short-term and long-term, but it certainly is a savings to pay long-term capital gains. So I wanted to point that out, make sure you understand that part of it. So then what do we do? Let's take a look at the dashboard, and I'll talk about this a little bit more. So equities, looks like the Dow is starting to make a comeback, S&P trying to make a comeback. We'll see what these look like at the end of the day. NASDAQ 100. The VIX now is getting close to 20. Actually, it went over 20. Came back now down to 19.5, but it was over 20. So that is bearish. That's where bears are in control. The 10-year, interestingly, is down. So the 10-year went down as a result of today's sell-off, and the dollar is down as well. That's usually good for stocks. Commodities, gold is up, like I mentioned before. Silver is up slightly. Oil, down. Oil's down today. Crypto, see what Bitcoin's doing. Bitcoin is down 115,000. But Ethereum is down even more. So Ethereum is down 2.3%, whereas Bitcoin is only down 0.3%. So cryptos are down as well. If we look at the sectors, just like I mentioned, all four of the top sectors are defensive. And the ones at the bottom, financial, energy, consumer, discretionary. Discretionary is one of the most aggressive, and technology is one of the most. Communication services right in the middle. You'll see the advancers and decliners. The breadth yesterday was pretty much neutral. Today, the breadth is decidedly negative. So the market is definitely going lower. Renewable energy, interestingly, is the #1 industry group. And back on the website, if I go to the charts page, we get all the industry groups up here. I can click on this little box for renewable energy, and we'll see which ones are doing the best today. So First Solar is up 7% today. Solar Edge is not up much, up maybe just 1%. So that's for today. If we look at the whole week, in this case, these are the ones. First Solar is up 1%, but the rest of these are negative for the week. So it's just today that they're starting to get, looks like they're getting a bid. So let's take a look at the portfolios page, and I want to show you something here. So on this page, and this will answer another person's question, that this was through an email. Someone sent me an email, which folks can do that as well on my website. You can respond directly to me. This can be used for, this is the market timing strategy. It's based on the weekly, which is a long-term, and it's meant to be able to capture long-term capital gains. That's the strategy here. So if we look at the weekly chart, I'll show you what I mean. On the weekly chart, and this is based on the weekly, Right now it's up 12%. If you were using the triple leveraged down here, you'd be up 44%, 36% on the weekly. But if we look at the weekly chart, right now, you can see the market's going down. It's got a blue bar after a green, but it is not below the 21 yet. So it is not giving a sell signal. It's not giving a go to cash signal yet. But if we look at where the previous ones were, and I have to go back a little further to see this. Let's go back 10 months, so right here. So the previous signal was way back here in 23. That was the up signal. That was the long signal. It stayed long, even though right here, the market went below the 21, but it closed by the end of the week. Today is Friday, so it's the end of the week. So this one closed above it. So it never gave a cash signal, even though we had this big red bar. Did not get a cash signal until here. So that was a year and 4 months that you would have been in that trade, only one trade through that whole period, and that would have captured long-term capital gains. So in that particular case, that was a really good run. Now, do you hold out for long-term capital gains? Do you look at something like this and say, no, I'm going to stick around for long-term capital gains. I need to hold on a little bit longer. In this particular case, it actually worked out. This particular strategy, if this had closed below the 21 on Friday of that week, then I would have been out even though I'm not capturing long-term gains. And the reason for that, for me, and everybody is different, so you have to understand your own strategy, your own trading style. For me, it's not worth staying in a losing trade just because I want to capture long-term capital gains. That's not a reason. If I go back over here and look at my top 10 list, let's look at the one at the bottom of the list right here, down 29% today. Let's look at this stock and see what would have happened if I had wanted to stay in for long-term capital gains. So this is, let's go back for a year. We'll go back 1 year and 4 months. All right, so a year ago in August, that's right back here. If I had bought right here in August, I would have ridden it all, and I wanted to capture long-term capital gains. I would have ridden it all the way up. I would have ridden it all the way down and had a big loss. Let's actually put a line in here, right where the 1st of August was. Let's see, here's August, it's right about here. So if I got in 1st of August back here and wanted to capture long-term capital gains, then would have gone up, would have come down, would have gone up. I would have been feeling fine through here. Then it went down, went all the way down here, and I would say, no, I'm holding on because I want long-term capital gains. So it would have taken a huge loss down here. So this right here is at 47. This would have gone down to $30. So that's that's about 35% loss. And then it came all the way back up. And then I'm like, oh, I'm so glad that I had this strategy that I'm hanging in for long-term capital gains. But then we get this big, huge downtrend right here today. And now we are again at a loss. So we're losing money just to make sure that I am not paying that extra 10 or 15% in taxes. The difference between short-term and long-term, depending on your tax bracket. But even at the highest levels, like I said, 37% is the highest, but the effective rate is about 25. So paying 25, roughly about 12% difference just to be able to try to capture long-term capital gains. And you're losing money as a result of that. So that's, I don't think it's a bad strategy to capture long-term capital gains. You just have to know what you're doing. You have to know what stock you're in. I don't think it's a good strategy to hang on to a stock just for the long-term capital gains. Now, if I wanted to hold this for 20 years, so that's a different story. So 20 years, I would have bought it back here in 2007 at the exact same price, by the way, exact same price. And the dividend looks like they don't pay a dividend on this one. So you'd want to do this with a dividend stock, obviously. And it just basically went sideways. Big loss right here, sideways again. Doesn't look like it's going much above or below that line. So is that really a good strategy, just to hang on to a stock just for long-term capital gains? Personally, I don't think so, but everybody has a different strategy, and you have to make up your mind. You have to know yourself and understand what your strategy is. So let's go back here again for a second and look at this market timing strategy. I put the stoplight on here. Let's see what that looks like today. The stoplight today, this basically has the S&P, the NASDAQ, and a daily and weekly for the total market. And you can see here, we'll look at this more closely in a second, but it's getting close to that green line, close to getting into the caution area. Now, for the daily chart, that caution area is below the 50-day. For the weekly, it's much, much lower than that. But the price is different as well. So let's go back and take a look now at each one of these. First, I'm going to look at the weekly. That's what the market timing strategy is based on. So from a weekly, you can already see over here the early warning is showing us that it has a blue bar. So it's moving off of a bullish to a neutral as of yesterday. This will get updated after the close each day. If we look at a weekly chart, on the weekly, you can see we're still not even down to the 8 EMA, the 8-day moving average. 8-week moving average. So we are still well above our go to cash level. The go to cash level will be below the 21 right there, just like it was back here. This was on Friday. It ended above it, even though on Monday it opened well below it. But by Friday, it opened above it. Remember, this is a weekly chart. So it did not signal a go to cash back here, even though it was way below there. It has a long way to go to get there right now. Right now, it's at about 294. So 294 is where it would have to close below in order to get a go to cash signal. That's if you're holding for the long term, like we did through here for a year and 4 months, and get out here and back in right here. However, if you don't have the stomach to hold through that kind of downtrend, we're all the way up here at 315, you'd have to be giving up basically 20 points before it gets a go to cash signal. If you're not willing to do that and you want to use the daily instead, this one will move more quickly. You can see it went long sooner, so it has more gain right now, and it will go short. It will go to cash much sooner. So let's look at the daily and see where it's at. So the go to cash on this is closing below the 21. Now, interestingly, it went way down, way below it, and it's starting to make a comeback now. So this right near the close today, we'll see, or when at the close today, we'll see where it is. If it is below the 21 at the close today, then this one will get a go to cash signal at the end of the day today. This will say cash right here. These will still be bullish because the moving averages have not crossed. So in order for those to go bearish, these moving averages will have to cross right here. But it will still have a go to cash signal if it closes below the 21. We'll see what happens by the end of the day. Let's look at things right now and see what the current status looks like. There's the S&P. You can see it's the expected. Look at that, right down to the expected move from last Friday. The expected move today will get much tighter. Actually, it'll move, probably this whole thing will move lower as a result of this. But interestingly, as of last Friday's expected move, it's just about, actually went below it today. But let's look at where we are right now. So yes, we're starting to come back. We've got 2 green bars now in a row. So we'll see. Let's go back to this one. These are the defensive sectors. Staples is starting to come back up again. Utilities continuing to go higher. And if we look at the aggressive sectors, technology is making a comeback. Financials a little bit, discretionary flat. Communications, which is the one that was strongest, is now pulling back. So this is not giving me a lot of uh, comfortable feeling that we're rotating. This basically could be short covering right here. So the second half of the day is going to be really important to see what happens, see how this ends the day. We're trying to come back right now, but we'll see. So for those that are subscribers, I recommend going to that market timing page. You can get to it right from the home page and click right on this chart right here and see what this looks like. I will pretty much guarantee that it's going to be going lower. I'll show you how I step through each of these. At the end of each day, you can see right there, it's got a hammer. So the market, it looks like it's trying to come back. And there's probably a hammer on all of these. Yeah, most all of these. Market's trying to make a comeback. That's really, really important at the end of the day that this ends either right where it is now or it ends higher. But notice the 5 is crossing the 21, so they are all getting bear signals on the short term. But right now they all have hammers halfway through the day. It's 12:16 right now. All right, I think that's all I had to talk about. I know it's quite a bit to cover today. The market is certainly much weaker than it has been. And we head into next, especially going into the close, it's going to be really important. And then we head in next week into the heart of August. Just before I finish, let me take a look at the Magnificent Seven and see what they're doing. Just out of curiosity, Tesla got a short-term down signal yesterday. Lilly had one 2 days ago. You can see all of these have had up signals. Meta got a nice bounce based on earnings, but let's go through each one and see what they look like. Here's Google, red bar on Google. Big red bar on Amazon. So they reported yesterday. So market didn't like it. It's actually below the 50-day today. Apple, big red one. Apple actually had fairly good earnings yesterday, but it first started higher and now selling off big time. Notice how much wider the bars are today. I said last week that after Thursday, we're going to get a lot more volatility. There's Meta, had a great first day, pulling back now. Microsoft, great first day, pulling back now. NVIDIA, still blue, looks okay. Tesla, hanging in there, right in that box. Netflix, still going down. Broadcom, all of these trying to make a comeback at the end of the day. There's Costco. Costco is actually the strongest looking one, interestingly. So Costco is sitting right at its 21 and it has a green bar. So Costco might be the one to take a look at. Palantir didn't move much. Arista got a blue bar and Lilly is still down. So that's what everything looks like right now. All right. Thanks for watching. Sorry I went a little bit longer, but I really wanted to talk about that long-term versus short-term capital gains. Hanging on for long-term is a good strategy. You should do it with dividend stocks, of course, and certainly with stocks that are strong and moving up. So you need to zoom out, get a wider picture. If I zoom out on the S&P to a monthly chart, you can see how ever since 2009, it's just been consistently going up. Even the 2022 cyclical bear market, even COVID right here, never closed below the 50. Even back here, 2015, 2018, 2011, just continually moving up. So we're still pretty far up above all of that. Overall, it's still bullish. So even if we get a pullback in August and September, I don't think it's going to break this uptrend channel. One last thing I want to mention, because I watched this yesterday and actually signed up. And for anybody that is interested, go back to my website again, to the options page. There's a lot of good educational material here. There's some really good books. Mean reversion trading, which is debit spreads, basically, and then every Friday into payday, which is also a spread strategy. But these are two of the strategies that this guy talks about. I also have stocks with weekly options. So if you want to do weekly options, they usually have lots of liquidity. This is a CSV file. You can download all of the stocks with weekly options right into your own platform, whatever you might use. And down here, it shows you, these are the stocks that have cash settled index options, which, going back to the long-term capital gains conversation, a lot of people don't know this, but if you trade these, especially if you do futures or options trading with any of these ticker symbols right here, then 60% of your profits are treated as long-term capital gains, regardless of how long you hold it. You can do these in one day. You can do a 0 DTE, 0 days to expiration, and you still will get treated as long-term capital gains on 60% of your profits. 40% is short-term capital gains. So it doesn't matter how long you hold these. So it's interesting, especially for those that like to trade options. These are good ones to trade for this particular reason right here. By the way, your trading platform, Schwab or whatever platform you use, usually automatically calculates that for you. So when they send you the statements at the end of the year, they will already calculate the 60% capital gains for each of these. So just one more thing I wanted to point out. By the way, this is updated every day as well. So if you like to trade these, you can see what the status, what the trend status looks like. You can see the Dow now has a red bar. The other ones all have blue bars, but the short-term, medium-term, and long-term are all bullish still. All right. So these two books are great books. And that leads me to the last thing, which is, let's see if I can find it now. It was right on here. They have a special, let me show you this is from Bruce Marshall from Simpler Trading. He has a training class that he's doing. Basically, will teach you how to identify good candidates, develop a plan, etc. 3 trading strategies. One of them is called Diagonal. That's the second book that I showed, generating a weekly income. The second one is the debit spread. That's the first book that I showed. They use those 2 strategies, and the last one is the butterfly. So these are low stress strategies and ways that that he will teach you. This is his class, 14-day class. I think one of these has the link on it. Yeah, right here. So this is the link, simplertrading.com/income. If you want to sign up, it's $397 is the price of the class. You get, there's actually 4 different classes. So the first one is just teaching you about options and how to trade them. And the next 3 classes are on each of these individual strategies: diagonals, debit spreads, and butterflies. He's really good at teaching. I really like his style, and I really like his strategies. So this is basically the whole class. So you can take a picture of this if you want to, and then go to that link if you want to sign up. But I wanted to point that out for anyone. I know there's some of my subscribers that do options and some that might be interested in options. So if you're interested in learning about it, this is a low-cost way of doing it, learning and understanding it from a real pro, somebody that's been doing it for many, many years. All right, just wanted to throw that out there as well. So thanks for watching, and please like and subscribe. Let me know if there's anything you would like me to check into or stocks you want me to check. I'd be happy to do that. And I will talk. Have a good weekend. Hopefully we'll see what happens at the end of the day. I don't think I'm going to be doing a Friday session because I've got things to do tonight. So this is it till Monday. Have a good weekend, and I will talk to you later.